Greetings, learners. My name is Mr. Simbi, and welcome to today's accounting class. In today's class, we are going to be talking statement of comprehensive income. And we have an extract pre-adjustment trial balance of Gray Distributors on the 28th of February. And then we have adjustments 1 up to 3. Now we want to see how can we adjust these amounts when we prepare the statement of comprehensive income. Let's begin. One employee was omitted from the salaries journal. Now that simply means we need to record the employee that was omitted from the salaries journal of February. That is the last month of the financial year. His details are as follows. So here we have gross. When I come here under my operating expenses, I know that the first thing that I must record it is the amount that is in the trial balance. That is my 96,750. So I'll therefore come here and I'll say salaries. All right? So I have my salaries. I open my bracket and I have my 96,750. Then gross salary. Then I have deductions. When I am preparing my statement of comprehensive income, I need to record my gross salary. So I'll come here, then I'll say plus 10,000, plus 10,000. All right? And then I am now given deductions as well as the employer contributes on towards pension fund and medical aid. All contributions are debited to the salaries account. All right. So the next thing that I now need to do is to record my contributions. But I know at times I may be required to do the statement of financial position adjustments. So let's see what I would record in there. In my statement of financial position, so I'm going to do it at the same time, I have to record what is known as creditors for salaries. This is the net salary. This is the net salary. So we have to record the net salary. But for us to get net salary, it is gross minus deductions. So, in other words, I have to subtract some particular amounts. I have to subtract some particular amounts. So the amounts that I'm going to subtract, it is your pay as you earn. So I can come here just so you can see how to get the creditors for salaries. I'll subtract my 1.8 and I'll subtract the pension fund, which is 7.5%. If you get your 7.5%, we can actually calculate that to get the 7.5%, which is going to be 7.5 over 100 multiply by the gross, multiply by 10,000. If you punch that in the calculator, you get 7 Rand 50. So I'm coming here to say on my pension fund, I have 750 rands. And on my UIF, it is 1%. UIF, it is 1% of the gross, 1% of 10,000. And that will then give me, if I say 1% of that, that will give me 100. Okay? That is UIF, 1% of gross. So it gives me 100 rands. So here I have my 100 rands. So for me to get creditors for salaries, I would then say 10,000 minus 1.8 minus 750 minus 720 minus 100. And in total, if you punch that in the calculator, you should get an amount that is 6,630. That becomes your creditors for salaries. All right. So let's come now and record the other amounts. Your pay as you earn comes into your trade and other payables. So I'll come here. Your pay as you earn is 1,800. I'll bring it here, 1,800. For UIF, I don't have UIF deductions. I only have UIF. I don't have contributions, rather. I only have UIF deductions. I don't have contributions. So I'll just bring my UIF. Remember, it is 100 rands. Now, for pension fund, I'll then come here and I'll say my pension fund, I'll open my bracket. And on my pension fund, I'll then get the pension fund deduction. Remember, that is your 750. So I'll come here and say 750. Then I also have medical aid. I'm going to write medical aid at the bottom here. That is medical aid. And on my medical aid, I have 720. So I have medical aid 720 over here. All right. Then I come to the bottom. It says the employer contributes rand for rand towards pension fund. So on the pension fund, we're going to have contributions, rand for rand. That means we're taking the 750, we multiply it by 1 rand. So the employer is going to contribute. So I'm being told all contributions are debited to the salaries account. So I'll come in and say plus 750. Then I'll also come here on the pension fund. Then I say plus 750. So I have 750, then I close it, then I have 1,500. In my statement of financial position, this 750 in trade and other payables, this is a deduction and this is a contribution. You must take note of that. And then lastly, medical aid on rand for rand. So I'll also come here and say my medical aid was 720. I multiply that by 1. That gives me 720. So I'll come here and say plus 720. I'll also come to my medical aid and say plus 720. And then that will give me 1,440 over there. And then I'll close this one now in my statement of comprehensive income. Then I'll end up with 108,220. This is how you would do the salaries adjustment when an employee has been omitted from the salaries journal. When we prepare our statement of comprehensive income, we record it under operating expenses. But remember, that adjustment also affects your statement of financial position, and it goes to trade and other payables. In trade and other payables, you bring it all first with the creditors for salaries, then you bring your pay as you earn, UIF, pension fund, and then medical aid. Let's look at the next adjustment. Okay, so this is how it would have been done. This is what exactly we have done when I was doing it with you. All right, this is exactly how it's done. Creditors for salaries, pay as you earn, UIF, pension fund, then medical aid. And then this is the final expense on your salaries. Let's go to the next adjustment. The next adjustment reads, the telephone account was received but only be paid in March. March is the next financial period. Therefore, this means we have not paid for this telephone account. So we are having an accrued expense. We're having an accrued expense. And when we have an accrued expense, remember, we must record it in our statement of comprehensive income. So I'll come here, then I will say telephone. And I'll bring the amount from the list of balances, which is 12,560. 12,560. Then I will then add the amount that is owing, 1,000. So I'll come here, then I'll say plus 1,000. This would then give me 13,560. I know that when an amount is owing, it must go to trade and other payables. So I'll come here, then I'll say accrued expenses. Accrued expenses. And then it is 1,000. It has to be done in this way. All right, there it is. Exactly the same thing that I had done when I was doing my calculations. All right, now, my next adjustment reads, commission of 4,000 has not yet been received by the business. So we have earned this commission, but we have not yet received it. So this therefore becomes what we call accrued income. Accrued income. We have earned it, but not yet received it. So I'll come to my accrued income, to record the accrued income rather. I'll come to my other operating income, Then I will now say commission income, right? I have to record commission income. So I'll come in and say commission income. Commission income, 4,000 has not yet been received. So we had no other commission income in the list of balances. So this is all the commission income that we have. So we have earned 4,000 and we have not yet received that particular 4,000. So I'll bring it to my other operating income, then I'll say commission income. I understand that this has to come to trade and other receivables as accrued income. So I'll record it as accrued income and the amount is 4,000. Remember, we had no commission income in the nominal account section. So I'll just record here my 4,000. Dear learners, let's go for an ad break and I'll see you shortly.